then now this kind of weaves directly into literally, and it's the first thing on my list, homeowners insurance.
Yeah.
It's blowing me away what's going on.
It's a major factor in buying a house now.
It's a huge factor now. And I mean, you and I have had now multiple conversations about this. There's some markets that insurance companies just like, we're out.
Yeah, Florida for one.
Yeah, we're out. And I just got a report where, the insurance companies have paid out more than they've brought in claims for kind of like in homeowners insurance for the first time in, property casual for the first time in like forever. And I got my homeowners insurance bill, and I hadn't been looking at it it's not one of those things that you like look at all the time.
Right.
And I've really, I had a house burned down once, and they took such good care of me. I just, in my mind, I was like, I'm with you for life because, wow, you took such good care of me. And I have a great agent and everything, but I looked at that bill and I said, this is our quarterly bill, right? Mm-hmm. And Tracy's like, yeah, no, that's our monthly bill now. And I said, would you please go shop this around a little just to kind of see? It's the first time in 30 years where I'm like, we probably should shop this around. It's probably not going to do any good, right? All the property casualty companies have reset their pricing, but it's shocking to me how much the inflation has been on that. It's just been huge. And then what you and I deal with too, trying to get them the lowest rate, trying to get them the right price, trying to get them all those right things. And then some transactions like, wow, we're just trying to get you insurance.
That's true. And I was in an insurance meeting 2 weeks ago, and we talked about the modeling, and the insurance companies have used the same modeling for 100 years, and they've used the annual CPI of 3% per year, and so they were doing that all the way through COVID, and then we've had all these storms. You have the fires in California, the hurricanes, the tornadoes, the hail, everything else, and they're all of a sudden completely upside down. None of them are making money. They're going bankrupt. Mm-hmm. And so the important thing to keep in mind is, yeah, you could find maybe some cheaper insurance, but the question is if they're going to be around next year or when you need them. So you need to go with a strong insurance company.
100% agree. And perfect storm. I mean, it literally, it's ironic that it's a perfect storm situation. Yeah. You had all these catastrophes and all these things that ran up the need for insurance, right? The claims. But then we also had the COVID supply line issues, and we had this huge inflation in materials. Mm-hmm. Okay. So you had literally a 1-2 punch to the insurance industry. You had way more claims, and you had way higher expensive materials, and those came together, and it just like they're underwater.
And one of the interesting things is homeowners are to blame for this as well. So in this insurance meeting I was in, they said, look, people are so strapped for money that they've stopped doing maintenance on their home.
Wow.
So rather than fix a potential plumbing problem today, they just let it go. And then when it breaks and floods the entire house, they expect the insurance company to come in and do the repairs.
But then their insurance is going up and up and up and up and up and up.
That's right.
So it's costing you way more over the long haul. And really now it's getting to be way more over the short haul.
Yes.
In insurance, if you can get insured, or if your insurance company is going to be around, to your point, right? Mm-hmm. Then to just, let's spend that, $500 and get that fixed. But you're right. People are getting to the end of their sidewalk. We're seeing $1 trillion of COVID savings has been completely spent.
Yes.
Okay. We saw this huge push into financing everything under the sun on credit cards. So the spending didn't stop, but it just kind of moved over into utilizing credit cards, right? And now we've seen that kind of topping off and getting to the end of that sidewalk, and now people have you've seen this huge push into buy now, pay later, and it's interesting to see the statistics on buy now, pay later when you've got. I think the number I saw was like 27% of buy now, pay later was for consumables,
And
like groceries,
yes.
and that sort of thing, right? And so then all of a sudden this pipe that needs fixed that's $398. Yeah, no, I'm gonna I saw that ad where I can get that tape and I can put it on a boat and the boat will float. Yeah, that'll work.
Sure.
And then it doesn't. And then it floods the house and destroys the sheetrock, and you got a major problem.
And part of the positive news that I've seen so far lately is that in 2005, 2006, one of the things we saw with a huge run up in housing prices, people went in and started taking out second and third mortgages, and then they went out and spent that money. So far, people haven't started doing that again.
I saw that statistic just 2 days ago, and I was thrilled to see that. You're absolutely right, and in a really interesting time, because values have shot up so much.
Yes.
So there's a crap load of equity, but people are kind of like, yeah, no, I'm not going to tap that. Maybe, I don't know, is it inability or lack of products? And those interest rates are certainly a heck of a lot higher. But yeah, I saw that, and I was so thrilled to see that home equity was a fraction of what it was pre-running up to the financial crisis. It's been very muted.
It has been. And what I personally saw in the financial crisis was the people who did that, they went out and got the home equity loans and leveraged up. They're the people who were completely wiped out. They were destroyed. And so what we don't know is if people actually learned their lesson, or if their underlying mortgage rates are so low that they're saying, I'm not going to mess
terrible
with this.
Blended, situation. And yeah, exactly.
So we'll see. I hope people have learned their lesson and they're making choices. But we're at a point where, as you mentioned, Dave, people are on the edge of a cliff. They have nowhere else to go.
Too many people
they can't borrow anymore. They have no savings.
Yeah.
And that's a tragic thing.
It's super tragic. We don't see much in the middle.
No.
There's literally our clients that are they're good. They're flush, they're everything's check-in, scores are high, lots of money in the bank, and then our other clients are just like, okay, how are we going to pull this off? I want to make most of my attention is I need to make sure I'm getting you into a decent position, because I don't want to cause a problem for you. Let's make sure that this is financially viable for you, right? And there seems to be no middle ground, but you're right. It's the separation of that is getting wider. And we do see, so many people that are just kind of getting to that end of that, that thrust that we had in spending, right? That ability to like wake up and feel wealthy and know that I got this money in the bank and I've got all this equity growing and all that stuff. And that's kind of, come to an end, but we still have that equity piece. Now, there's 70 million households that you could count into that equation.
Something like that.
Something like that. Maybe sub that number a little bit. So that's not everybody, right? I mean, not even close to everybody, but it's a big chunk of the national economy. It's a big chunk of the situation, but that's that. I wonder. So I have a question for you on that front. Is that, and by the way, you mentioned something, and this kind of ties into it. You were like, you hope people learn the lesson. I think it's a combination. I think that's it. I think a lot of people have learned lesson, and also generationally.
Sure.
The younger generation saw their parents go through financial crisis.
And they watched their houses disappear.
Absolutely. And they're like, yeah, no, I'm not doing what dad, mom did. That's I don't want to be there. Right. And so I think that kind of belief system is in there, and I think that's been a part of it. But at the same time, I also think that there's the capacity and the capability, right? Just the 4 C's of finance. Like,
Sure.
what have they been able to do regardless of the equity in the property? But then I also do think that, there's been a huge factor with COVID handed out this gift of these super low interest rates on the first mortgage. I think you're absolutely right. I think people have been very hesitant to fuss with that.
And it's, I mean, those rates are so unbelievable. I remember when I took a look at my mother's house. This is 20 years ago. Well, actually almost 30 years ago. And I just had a conversation with her because she bought her house in about 1963. Huh. And I said, Mom, what's your interest rate? And she says, 4.5%.
It blew your mind.
Yeah, it blew my mind.
Right.
And I said to myself, oh my gosh, I wish I had a rate that low. I'll never see that. And then all of a sudden, we're seeing rates at like 2.53 or something that are just
insane.
It is insane.
Yeah.
And that's part of the problem that we have with housing supply right now. No one wants to sell. They don't want to get rid of that rate.
So that's the question. Thank you. You just led me right back to that question. As I'm wondering, with all that equity that's not being tapped, right? Either because of it's not able to be tapped at the rate that, kind of defeat the purpose of the low interest rate. But do we find there's kind of two sides of that coin? There's people that are like, yeah, I just can't give up that rate and this is too good, but they don't fit the house anymore, right? So there's that kind of tension that's building up in the market that I feel.
Yes.
And then there's the other side of the coin where it's like, I've got all this equity and it's the way for me to solve the problem. So instead of going and getting an expensive equity loan that defeats the purpose of why I'm keeping on hold of this thing, I'm going to sell it. So is there some pressure on those two sides that might create some more inventory?
There's definitely pressure there. But by the same token, let's take a second and talk about expectation.
Yeah.
So there is generational expectation. So when I grew up, I don't mean to be too personal, but it's interesting. I had 2 brothers and 3 sisters. And we had really a 3-bedroom home. And so we had 3 girls in 1 bedroom, 3 boys in 1 bedroom, and then our parents' house. And we had 1 3/4 baths. Okay.
I grew up very similar.
Okay.
But that's cool.
Then when I got married, my wife and I started having children, and she says, we need a new house. I said,
what are you talking about?
Yeah, this house is fine. She says, oh, no, all the kids need their own bedroom. I said, are you nuts?
Yeah, now all kids have their own bedroom and bathroom.
Right. And so there's just been this kind of skewed expectation. But I think that expectation is coming back sort of to reality again. Have you ever watched the old movies like the 40s and 50s?
We now, Tracy and I now have this thing where once a week we watch a classic.
They're the best.
They're the best.
And
awesome.
you see there multi-generations living in the same house.
Yeah.
Grandpa, and then mom and dad and all the kids. And then you also see people who are renters, and they didn't rent apartments; they rented rooms.
Yeah, and that's coming back big time.
Yes.
Yeah, it's coming back big time.
So there are some benefits to that.
Or basements, or different things like that. Yeah.
The benefits are that people are being forced to actually have relationships rather than hide in their room.
And they're sweet.
Yes. And so there are benefits to that. I'm not saying that that's the way everyone should live.
Yeah.
But part of the thing that we need to always keep in mind is expectation. So I think that people's expectations are being dialed back just a little bit. But people with money, and there are a lot of them. I deal with people who are 35 years old. Yeah. They're both professionals. They have great degrees. They're making between $500,000 and $1 million a year between them.
Yeah.
So they have a lot of money, and they're really smart people.
Yeah.
They're spending their money wisely, but those people are investing in houses that work for whatever lifestyle they want. So when you and I work together, And one of the things I love about working with you, Dave, is that you always want to do what's right for the client.
As to you, that's why I love working with you too.
So
I never have to worry about that. It's awesome.
we always focus on lifestyle first.
Yeah.
So we say, how do you want to live your life?
Yeah.
And people kind of look at me and they're kind of confused.
Yeah.
And I say, well, I mean, I understand that you have this budget of whatever it is, but you can spend that budget in a rural lifestyle, in an urban lifestyle, in a co-op lifestyle, suburban lifestyle, whatever it is. We can spend that money for you. So the real question is, how do you want to live your life?
Yeah. Instead of letting real estate tell you how you're going to live your life, right?
Yes.
And some people just getting started, I agree with you on that. I think some people just getting started, I'm like, just let's get you on the wave of real estate. Let's get you in. Let's get you started, because you can catch that, fix it up, kind of get to the next one, the next one, the next one. As you do, you end up with more and more choice, right?
Yes.
Back to a point you made, and I agree with you wholeheartedly. The needs and the wants have changed.
Yes.
Right? So much, like in every single way, right? And you go back to like the old films, or even films in the 80s or 70s,
Sure.
and 60s and 50s. Like, you look at some of these old films and you kind of think back in time, the needs and the wants have changed significantly in every single form of consumerism, right?
Mm-hmm.
So like, you kind of look back in time and it's like, we need a car, and we needed like one pair of jeans. We need boots. I need my work shoes. And I need a suit, right? Not like 9 colors of suit. I need a suit, right? Maybe three ties, right? So I look like I'm dressed differently. A few shirts. And we didn't need a garage, but then eventually we needed a garage, 1-car garage, right? And then, so over time we have seen the needs and the wants completely change, because then you're like, well, I want another suit, or I want another car. Wow, how extravagant is that? Well, now, just like today, everyone absolutely needs to have this very incredibly expensive, like, plastic computer with some glass on it, right? It's not cheap.
No.
These are getting so incredibly expensive, and if you don't buy the new ones, then they don't work right.
And even people on
they won't
welfare,
keep up with the software.
Even people on welfare have a $1,500 iPhone.
Oh, we're all cybernetic. We've just turned into the cybernetic part of us is exterior for the moment, but we're now all cyborgs. But it's interesting. We absolutely need this, right? We absolutely need the different wardrobe. We absolutely need to have multiple cars, and we need everybody absolutely. It'd just be uncalled for to have 2 people in a bedroom,
right?
For hell's sakes. So the needs and the wants have changed, and it's been a big part of what's grown the economy and our GDP and everything. Because like you wake up, you're born, and you're just kind of handed one of these like immediately, to shut you up, and then all of a sudden, the world, is kind of handed to you, and you just from the get-go, there's all of these needs. These are requirements that we have to have. We have to be on social media. We have to do this. We have to do that. And it takes devices and stuff and things. And, all of this consumerism has just gotten to a point where it's a big, huge, expensive basket of needs. And the question is what I hear you saying when you talk about, the old movies related to real estate, that's our industry, is what do you really need?
Yes.
I mean, that question should be asked. I find Tracy and I are asking that question a hell of a lot more.
Yeah.
As we age, we're like, do we really need that?
Right.
And I think that there needs to be a national, do you need that day?
Yes. And as it relates to everything else in life, I think the last figure I saw was that 70% of the economy was based on consumerism.
Yeah, it's all a GDP. It's huge.
And so then this morning I just read the revision of the economic output for the second quarter. Originally they thought it was at 4.6. Well, it's at 1.8.
It's 1.8, and I think it was the was Georgia Fed that said 1.2. There was two 1.8s, and then one of them was 1.2. Yeah,
something like that.
The revisions are pointing at much lower numbers. Yeah.
So what we're saying is that the economy has definitely slowed.
Yeah.
And so to a large extent, what I've seen people say is, I really don't care what the news is saying. This is what I'm seeing in my life.
This is what I'm dealing with. Yeah, for sure.
And so here's the thing I love about what we do. It is, if you work with the wrong people, they say, how much can you afford?
Yeah.
What can you qualify for?
Yeah, right.
We don't say that. We say, what's your target price?
Yeah.
What are you comfortable with?
Yeah.
And so then what I've learned over time is that if you're investing in consumer goods, it's disposable life. When you're investing in a home, it creates the foundation for everything. When we sold the home that we lived in and raised our kids in for 23 years, my kids freaked out.
Yeah, it's a big deal.
I had
You're like,
no idea that they would react that way.
Yeah.
But it was probably more displacing for them than it was for me. So when you take a look at this concept of creating a lifestyle, you're not just creating a lifestyle, you're creating a whole life.
A family
for
style.
You, for everyone you love, whether they're your friends, your kids, your extended family, whatever it is.
Yeah. It's a sphere of influence style.
Yes.
Yeah.
It's amazing.
Yeah. No, I agree with that wholeheartedly. And, you know, as we see the economy slowing down, and there's, I mean, it's slow, and the pace of the deceleration is increasing.
Yes.
Right. And it's interesting too, because people are like, well, if that's the case, well, then why do we still have this inflation? Why do we have this high interest rates? And you know, the charts kind of show that we're still in this through this year, right? They measure inflation year over year.
Yes.
You know, so you get an inflation reading this month. Well, they're measuring this to 12 months ago, right?
Yes.
And so if you just go back 12 months and look at the future readings, right? You can see that for the next readings, like, we're not going to make a whole heck of a lot of movement, even though so many things are decelerating and so many things are deflating. What's not deflating, that's inflating, is insurance. And, you know, we still have energy prices that are, you know, relatively high, and we continue to have international issues that push those up, and shelter. You know, there's just not that supply. And so those things are huge parts of the bucket of inflation that continues to put pressure on the numbers that make lending expensive, right? And there's not going to be relief on that for another 6+ months, maybe 12. But yet we are decelerating, right? And then rates start to come down at a sharper, you know, deceleration at some point in time, right? I think they have to kind of like,
right. And the Canadians reduced rates by 25 basis points today.
And I believe Great Britain did as well.
I didn't see that part yet. But one of the advantages that you and I have is because we're right on the front lines of the economy.
Yeah.
And so we see trends about 6 months to a year before everyone else sees them.
Yeah.
So when you're working with the right people who are really in tune to this, you have an advantage, because, you know, we're going to say to them, I don't know, let's pump the brakes here a little bit.
Yeah.
And I love the piece that you sent out earlier this week, which was, should I wait to buy now, or should I just buy now? It
was the cost of waiting.
That's correct.
The cost of waiting. What is the true cost of waiting? Right.
And I loved how you presented that. So
thank you.
Talk through that with us for a second.
And it's really straightforward with what we were talking about last time. and it's a really amazing report that MBS Highway puts out. That I love that tool. I love all of their tools. They're amazing. Nice little plug there for Barry. But it's a cost of waiting report, and it's taking forensic real estate data from literally the biggest and best repository of that data in the country, and it's pulling it in and saying, okay, we can forensically kind of see what your appreciation is going to be based on all the data and trends, and this is what we see, regardless of interest rates, is kind of basically where you're going to be at on appreciation, okay, with the property. So it's kind of like running a future appraisal every year forward, right?
Yes.
So we can take that and put it on one side, and then we can, on the other side, say, here's your mortgage. And this is what it costs you to get your financing for this property. And let's say interest rates are lower in a year from now, right? So you're waiting for that decrease in rates. What do you think that rate might be, right? You tell me. What do you think rates would be? And, a point lower? Okay, let's plug that in. So you're a point lower in a year from now. Yes, your payment's this much less in a year from now if the property would stay the same price. But the problem is look what the data on the appreciation says, right? And as rates come down, you're going to have more buyers making more offers on property. I'm hoping that we see some more release in some of these conversations we're having right now. Slower economy should create some more listings, should create more sales, right? Will it or not? We don't know, but there certainly will be a lot more buyers. We know that. We see it, you and I see that like within 2 days. Rates drop, all of a sudden we get busy. It's a busy week. It's just like faucet turns on. It just happens.
Yes.
So if the Fed, really goes out very vocally and says, we just reduced interest rates a quarter, and that's the shot heard around the world, right? All of a sudden you and I get super busy, but there's not a whole bunch of new houses for sale.
Yes.
And so we're running a forensic appreciation report based on here's what the cost of the home is going to be in a year. Yeah, here could be your savings. But if you run that rate at this increased cost, and then over here we publish the number, and I do this with clients all the time. I did one yesterday. It was $43,000. I'm like, you're going to pay $43,000 more. And I love how you put it. You're buying down your rate by dealing with the rate now.
Yes.
And it makes perfect sense. And then, of course, you can refinance down the road, so.
Well, you brought up a very important point, which is information is instantaneous now.
It is. It's just.
It's changed our life. And so all the new uses of AI will increase that. It increases the pace of change.
Mm-hmm.
And so people will say, well, so what do you think my house is worth today? And I say, well, it depends. Let me take a look at it.
Yeah.
I used to be able to look at them and say, well, Dave, based on today's marketplace, your house is worth $189,000, and it'll take about 3 months to sell.
That was a long time ago when it was 189. I think that was the house you sold me 20 years ago on Cavendish Drive, which used to be Bobby's parents.
So I say to them, we used to live on dry land. Now we live on the ocean. Yeah. So everything is in these huge swells.
Oh, yeah.
And you can't.
It's a moving target.
We get down in the bottom of that swell, and we can't see out of it. And so the tools that we're talking about, that you're talking about here, are so valuable because they get us out of that instantaneous shift, and they allow us to see up over that next wave and into the future. So there's hope.
I love the way you put that. I agree. And that's look, I'm net optimistic on the housing industry.
Sure, you should be.
Yeah, I mean, there's a lot of signs pointing in the right direction. My biggest concern is supply, but I think we get more of that. But you're absolutely right. I love what you're saying. You can't make a decision based on just the now.
Right.
You need to be able to make a decision on, a year, 2 years, 3 years. And have the data and the information, and have it presented in a way that makes sense, for hell's sakes, right? It's just really a make sense view of getting above that wave and seeing, what's going on over the horizon. And yeah, I agree with you. We're having a lot of fun with that.
We are, and,
Yeah.
and the way that we operate is different than the most of the world, because once we establish that target price for them, it is so neat to see them. We do this virtually, right?
Yeah.
So it's so neat
That's cool.
to see them sort of look at the computer with you and take a look at all the different scenarios,
Yeah.
and they're watching the market real time.
Yeah.
I don't know anyone else who does that.
Wow. You have mastered the culmination of thank you and what we do there and what we do together. You've become masterful at creating that transparency, not only on the real estate side and really getting them the information they need, but now we can do it on the finance side. And we have so much fun talking to these, every single client's the same way. They're like, wow, I get to see that. And I'm like, yeah, you get to, of course.
Oh, really?
That's, and it's that transparency it just, people love it.
Remember the conversation we had on the phone with a realtor up in the Seattle area, and we talked to her about working with us on and joining the team in this way. And I'll never forget when she says, "You can really do that?"
Yeah.
And we said, "Yeah,
Yeah, here, hop on. Let us show you."
We said, "Yeah, you can really do that." And
Yeah.
and then she said, "Dave, I would never believe you if Lynn wasn't
Yeah,
on
I
this
know.
call."
I know. I was like, oh, okay. I'm glad you're here, Lynn.
Only because
She
I'm
full on was just like, she said that verbatim.
yeah, only because I'm another realtor, right?
Well, yeah, I mean, and I'm a lender. Lenders always pounded down the doors of real estate agents, right? So,
Yes.
no, that was a great call. I believe it was, but those are fun. That's another one of those scenarios where when people realize what we do and how we're helping and how we're tackling the affordability issue, they're like, oh, you're like really doing that. And it's like, yeah,
Well,
we're really doing that.
and we're doing it quickly for people.
Yeah.
Like the client we just sent up to Portland,
Yeah.
and our partner agent there found them the right place. But you had them in such a strong position where they were ready to go, and no one else could have done that for them in Portland.
Well, thank you. That was fun too, because they came into it, and actually, Bobby, that was your referral is Bobby's best friends, and so you knew that, right?
I didn't know.
Yeah.
that.
Oh, I'm sorry, I didn't mention that. I don't know why I didn't, but Bobby had referred them in, and then of course I called you. Hey, we need a great agent up in Portland. The most amazing people, and they actually started the process in kind of like, yeah, we're not sure if we want to do this, right? And I was like, great. But let's get you some information to find out if you do, right?
Mm-hmm.
And I think that through our process and what we've developed together, it's so transparent and it creates such clarity on what's going on in the marketplace. People can make better decisions.
Yes.
And then it was like, wow, they were like, this is better than I thought. Okay, good. That's good to hear. Take that. Let's get into the market. And then Chad he's been amazing. He's just been absolutely fantastic. So then you connected us with Chad. Chad's awesome. Coldwell agent, total stud. And they had such a great experience with Chad. Chad just absolutely knew the neighborhoods and got into the weeds on, yeah, no, not here because of this. And by the way, this property, did you see this? And let's look at this pipe. And very, very detailed through that process. That made him that much more comfortable. Next thing you know, I don't know, what are we 3-4 weeks into this? They're under contract. We're closing in days. Like, bam. And people are finding that with good people, good resources, transparency, and just being honest with people and showing them what's real and what they're capable of, people are transacting and they're getting into really great. They're getting into what they want, what they're really aiming for. And that's such a good example of it. It's been a lot of fun.
Everyone uses the old adage that real estate is done locally. And really what we've been able to do is combine the expertise of local real estates
With virtual
real estate sales with access to the national mortgage market.
and a virtual experience.
Yes.
Yeah. 100% agree.
So it really is amazing. It isn't that they have to call an agent and get a referral to their Uncle Bobby, who does mortgages part-time or something like that.
Yeah.
I mean, we really can handle everything, and direct wholesale rates can handle everything, with a couple of exceptions. Like, you don't work in Manhattan, I know.
Yeah. Don't work in Manhattan. But there's not much we don't do. And by the way, we're even beyond residential too. So we do residential all the way up through rental DSCR, right? Mm-hmm. But then you're a business. The clients I love that are entrepreneurs. They're like, I have a business and I need to expand my business, so I need this bigger manufacturing facility. We got you. SBA 504, conventional. We got all kinds of commercial products for that person. And then, hey, by the way, we can also, what's going on with your primary residence or your vacation property? Or by chance, do you have a portfolio of rental DSCR? So we really do kind of really get a good cross-section of real estate finance to make sure that you don't need to go somewhere else, and you can still get that, you can still get access into that wholesale strike price. Yeah.
But Brenda, one of the agents that we partner with in Arkansas,
she's amazing. I love working with her. Yeah.
She and I sat down the other day, and she says to me, Lynn, so do you do commercial real estate or residential real estate? And I said, yes, I do. Both those things.
Yep.
And she says, no. But do you really only do commercial? And I said, no, I really do everything. And I said, let me paint the vision for you, Brenda. I'm taking off on your entrepreneurial example here. Here's the reality. You go to this business owner, and he needs to do an expansion or grow his business. But then that's one thing that we can help him with. But in addition to that, he's got to recruit a new CFO, for example, out of San Jose.
Let's get him taken care of.
And so what we say to him is, look, we'll take care of the sale of his house in San Jose.
Yep.
You come here and you begin your job, but by the way, bring your family. We'll tour all the neighborhoods with you.
Yep.
And so your family is very, very comfortable. We talk about each one of the neighborhoods individually. We talk about the schools. You're at work. You feel really comfortable that your family's well taken care of. We get your family situated. We find you the right home, and we're moving forward. But they've also created more jobs. Mm-hmm. And so that's the next conversation that we have with the entrepreneur, which is, you have employees. Let us take care of your employees.
Yeah.
And we can help them. We can help them refinance. We can help them move up. We can help them downsize, whatever it is. Yep. We have a full package here that you're not going to get anywhere else.
Yeah. And it's, we're coming, we're looking at that holistically as the human side and the business side.
Yes.
So it's like, I love the entrepreneur example because it's really great. Here are all the different places that, from a real estate consultative and lifestyle standpoint, we can help you. Your business needs more space. Whole bunch of question marks behind that, right? Where are your employees? You don't want to just go move somewhere to where all of a sudden that becomes a lot more difficult for them.
Yes.
Right? What are your business needs? What are all these different things? And then, to your exact point, okay, what's going on with you running the business? And do you want to reward yourself with a vacation home, or what's going on here and there? And then to your other point, like bringing in people and taking care of them. So it's a holistic approach, and it shouldn't be one-off. It's relationships you make, right? Mm-hmm. Either with first-time home buyers that are stepping into the market for the first time now we can do 0% down mortgages and even help get closing costs covered. And people are literally coming in and achieving the dream. And they're like, I have no idea how I came to closing with like $3,000, and that's like, I recently just had a transaction like that. And it's a lot of fun, to build that relationship and see them grow, get in on the wave. And then also they're moving into growing their businesses and recruiting people. And again, it's holistic. What can we do to help from a lifestyle standpoint on the real estate aspect of it, both personal and commercial, and what can we do, on whatever the financing needs are. And to your point again, let's think about this and look over the horizon. Let's make sure we're setting things up and making good decisions so that we're getting you in the right place in the future. And that sure makes this a lot of fun.
Well, and the way you described that was perfect, because there are two ways to do business. There's the relationship business and there's a transactional business.
Yeah, right.
And we always only work in the relationship business.
Yeah.
And we don't let people go. So I just closed on a farm with a client out of Puget Sound, and I was on the phone with him earlier today, and he says, "Oh my gosh! I mean, Lynn, can I just tell you the rest of my vision now? we have the first piece." He says, "Okay, so now we're going to start talking to all these neighbors, asking them if they want to sell their parcel because, we're interested in picking up those additional parcels."
Perfect.
And he says, "I just feel so fortunate to have run into you."
Yeah, that's awesome.
That makes my whole, not just my whole day, it makes my whole life.
That's the biggest compliment.
Yeah,
right.
I love working with people that way.
Yeah.
And so we're in business together for the long run.
Yeah, for sure. That's definitely the case. I love working with, we've worked together for a long time, but your clients, like when you're always the leading edge, right? And then I come in when we're ready to, start putting the numbers together, and if they're not paying cash or financing, all that different stuff. But I think of Brad, like he's a good example. I mean, to me, he's like your cousin.
Yes.
Like your clients literally are your family, and it's really awesome.
And what you don't know is I say to them, "Okay, Brad, now I want you to start working with Dave. If you have a problem with Dave, you call me."
Yeah.
I'll take care of it.
I will straighten Dave out.
Because
really
I know
quick.
his wife.
Yeah, that's right. You'll call Tracy.
Yeah.
And then I'm in real trouble. Yeah. Speaking of Brad, by the way, that just reminded me of something. He called me a couple days ago and he said, "Hey, I just watched the last podcast. I loved it. It was amazing. There was one part. He's like, you and Lynn really got in the weeds from an industry standpoint on the real estate commissions." And he goes, "It was great. Don't get me wrong. But how does that affect me again?" He's like, could you share that in more simple terms? Because I appreciate getting all of that information. I still have no idea how that affects me. He's a hyper intelligent human being that has been in real estate, has bought and sold so many properties and will continue to do so.
He is like
to
a homing pigeon.
He is
on great real estate buys.
No, absolutely. You're right. You're 100% right. He's just do what he does, right?
Yes.
It's kind of like the McDonald's Burger King thing, right?
Yes.
Just follow him around and you're in good shape. But somebody that, and just the point is like somebody with that much experience and intelligence saying, "Yeah, no, I still don't get what the hell all this means." And so
because we're such good
he goes in here, right. And he goes, "So in your next podcast, could you sum that up for us?" And I was like, absolutely. I'm glad I just remembered that. I'm glad that popped in my head. And here's and I thought about that for a minute, and here's my summary.
Because if the summary's not good, Robin's going to call me.
Yeah, okay. Okay, fair. Here's my summary. It doesn't change anything. This is a Y2K issue.
You're right. And I was, right before we started today, I was in a multiple listing service committee meeting at the Park City Multiple Listing Service. And someone, I think it was Todd there, made the comment. So what's the big deal? The fact is that it's forcing us to actually get on the phone and talk to each other and do our job.
Yeah.
That's all it is.
Yeah, which I think is important. I think about, and by the way, my tone has changed recently on that as it's matured. I really thought this was going to be this real major change. But then as I got, and I kind of started tracking it really early. And I was blowing you up 2 years ago asking questions about it, right? And
that's when I thought that rather than believing that you were mature at that point, that you were dyeing your hair gray.
No, it's unfortunately that's the real color. No, um, um, but I've changed my tone because I did think it was going to be more material. I didn't like what I was seeing, and then there was some other things I was really appreciating about it, and the transparency, all of that I love to see. And it reminds me of when post 2008 Dodd-Frank legislation changed the way loan originators are compensated, right?
Yes.
Before 2008, you had loan originators could steer a client into a product that could pay him more money. And so they were steering clients that should have been FHA into a subprime loan because they took less paperwork. Well, you could have qualified for an FHA loan, hell of a lot more work on an FHA loan, but the rate was like 2 points lower. But they got paid more. The originator got paid more if I did less work and shoved them into a subprime loan. And of course, we saw what happened. And so Dodd-Frank, changed the game. And they said, look, doesn't matter. You cannot get paid differently on different types of products. So it's an anti-steering function, right? And
yes.
Man, the industry was like, this is the nuclear bomb for the industry, going to destroy everything. And at the time I was running PRMI, and I was like, yeah, no, it's not. I mean, people can still make money.
That's true.
We just have to have a more sophisticated payroll system. We have to have more transparency, and we have to have some anti-steering policy in place. But literally, the industry thought it was just going to be this entire nuclear bomb. It was going to be this huge problem, and it was going to cost consumers more money because of X, Y, Z, and it was the stupidest stuff we were hearing. I think our company was literally one of the first companies to switch over. We literally switched over to the new payroll requirements weeks before it actually went into effect. And we weren't popular by our employees. They were our sales staff. I had 1,000 loan originators at my company, right? And they were just like, I remember how many emails I got. They were so pissed off. They were like, why are we doing this early? And I was like, because we got to get ahead of this. Like, we got to get this going. Nothing happened. Not a single thing happened. Like, we didn't skip one beat. Everybody got paid. The math worked fine. Yep, guess what? Clients were getting into the right products. Holy shit. That's the only thing that changed.
That's true.
Like, regulation works. It happens. And so I like what they're aiming at here. They're simply saying, let's make sure that consumers understand what they're paying for.
That's true.
The workload is still there. The stuff needs to get done. If it doesn't get done, something could go wrong that could cost you more money. But, and that was all getting done, all that work. I like the fact that now the consumer can come in and they can know exactly what's going to be done. And there has to be a set of communication around that. But from a standpoint of what impact is this going to have literally at the end of the day with the housing consumer, I'm having a hard time now seeing much of a change.
Here's the real change. It is in the way I communicate with the client.
Yeah.
So when I sit down with the people who are considering selling their property now, and the first thing out of their mouth is, oh, tell me about this lawsuit thing. And I say, let me give you a little bit of history about it. So here's the thing. My company charges X percent. And let me tell you how that gets broken out. I do X divided by 2. My company keeps X, and the agency or the brokerage representing the buyer keeps the other half of that X. I'm guaranteeing you that my company, Coldwell Banker, is going to pay that X to the cooperating brokerage. I'm guaranteeing you that.
Yeah.
Here's why we're doing that. We just spent a long time talking about the current economic conditions. Mm-hmm. So you have people where housing prices are high. They're not making a lot more money. They have down payment requirements in general. They have closing costs. And those are things like inspections and appraisals.
Title fees.
All those kinds of things. So they have those costs. And when you add all that up, that's a big bite for people to pay. Mm-hmm. So I say to my clients who want to sell, where do you think they're going to come up with the extra money to pay for professional services. And they get it. I mean, the light clicks on and they say, I understand there's only one place for most people to get that, and that is through me cooperating through a concession to help them with those costs. And so I have that conversation with them very carefully. Once I have it, they get it.
Yeah, totally. And again, I think those questions go away just a few months after it's, we're next month?
Yeah.
It's in effect.
Well, August.
Oh, August. Okay. So
August 17th.
So we got a couple months here, and then August 17th. So a couple months here, and then we get into January, and it's like, it's just, we're now in a new format, better communication to the client, but for them to have access to the real estate that's going to fit their needs, they need professional services. And then also the transaction is very complex. They need professional services. And I agree with you. I think that's exactly how it plays out. And by the way, you're such a good communicator with people. I've had so many people where after they've had that conversation with you, that like bag of bricks, set it down. They were just done.
Yeah.
So it's really great how you've got that, not only the expertise, but the ability to just lay it out in really simple terms.
People are really
stuff still has to get done.
It does, and they're really smart.
Yeah.
The thing I love about the American system in general is, and this is what has separated the United States out from the whole world economically, is that people understand self-interest.
Yeah.
And when you give people the opportunity to seek their own self-interest, and they do it in a moral way, the sky's the limit.
Yeah, I agree with that wholeheartedly.
But it has to be
excellent point.
It has to be moral, and that's, we just talked about the big economic crash, and the real issue was immorality.
It was immorality. There's just no other way to look at that. It was a really embarrassing time for the industry.
And you look back on it. We've talked about old movies. Now we're going to talk about old books. I just started reading Last of the Mohicans again.
Oh,
and
that's awesome.
I love the language in that book, and the language I love most is the great American experiment. And the great American experiment is, can people govern themselves?
Yeah, that's exactly right.
We don't need a king or a president or a Congress if people govern themselves.
Yeah.
Do the right thing.
Not everybody does.
No.
So we need, we need some stuff.
We need professional. Well, I'm not saying we don't need anything.
No, I know. But
we need professionals. So here's the difference. When you're working with the right mortgage company and the right real estate representative, what you really come to learn very quickly is that when I'm working with Dave Zitting, he's seen lots of game film. And because he's seen all this game film, he can coach me in the right way so that I can become the best that I can possibly become. That's why professional athletes have coaches, and they shoot film on everything they do so they can review it.
Yeah.
Well, because you're that coach, you've reviewed, I don't know, thousands and thousands and thousands of games, and you have all of that experience tied up. And who wouldn't want to have that advantage in their transaction?
That I'm so honored by that, and it's a huge compliment, and it's a mirror. That's what I see you doing every day. So
Thanks.
If that's what you're seeing in me, thank you, brother. I mean, that's great, because that's what I aim for. It is fun when you can do that easy.
It is.
Then that just takes thousands of hours of experience in it. But it is really, really fun when you can do that really easy and just put it out there, and people are happy about it.
And you can transmit the trust.
Yeah, for sure. Yeah, and I've learned a lot of skills and a lot of communication practices from you. So thank you for that.
I'm honored that you'd even say that.
Wow, You're the best, man. You really are. Well, man, this has been so much fun. It's great. I had a couple more topics, but we're kind of getting to wrap up time. We'll save them for next time. And we literally could sit here probably and talk all day long. We love the industry, and we love, we love helping people achieve the American dream, and there's a lot to be talked about in that. And so it's been a blast, man.
It has. And one of the things I want to talk about next time,
yes,
is the concept of agency.
Okay.
Because you and I had a conversation about that recently, and I don't think most people in the marketplace understand agency.
I agree. We just ran into that. We just ran into that with one of our Northwest clients, and I was frustrated, right? And I text you, and I probably sounded frustrated, and I was like, "Can you move this client?" And you're like, "Is there agency?" And I was like, "Oh yeah, I forgot about that."
So we'll talk about that because it's critical, really.
Yeah, it really is. I agree with you wholeheartedly. That's a really good point, and I think where the questions I have in it, dealing with this contemporary frustration is, and this is probably what I think is the crux of the conversation. So I'm guessing here, but it would be people need to understand agency to make sure they know what they're signing.
Yes.
Don't get into agency. You don't have to right out of the chute. Make sure that you've picked the right person. Make sure that you've picked the right. And man, there's no more frustrating thing when they don't have the right person. It just, the whole transaction is more difficult.
It is.
Yeah. And so, yeah, I just made a note of that. And I think that's a really good discussion. Thank you for bringing that up. We'll hit that on the next one for sure.
I'm excited about it.
Awesome. Me too, man. I'm excited for everything we're doing.
Me too.
Appreciate you so much.
Both sides of the fence.
Absolutely.
Sitting right here. People talking over the fence.
That's right. Thanks, man.
Sure.
Appreciate you so much.
See you soon.
Okay, bye.